The market is volatile, the stocks keep going down. Then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give back, reinvest like that. Everything you need to know, the First Fruits Podcast. Let's go.
Welcome to another episode of the First Fruit Stock Club. Man, welcome everybody. Man, I'm always thankful for another show, another Wednesday, another time to give you guys some information. Man, it's a lot going on in the markets. Man, I hope you guys are paying attention. Today's topic is the market downturn. But before I get into that, I want you to understand that the First Fruit Stock Club in this show, we really have four total principles that we guide by, that we live by, right? The first one, the very first one is, man, we want you guys to make money, right? The goal of this club is to make money. And a lot of people don't believe they can make money in the stock market. I'm here to show you that you can. And, you know, one day you're not going to want to go to work. Or one day your job may say, hey, look, we don't need you anymore. Like that can happen. Like we don't think we may have been at our job for a long time. We just saw the government shut down. Not the second one, but the first one, right? People have been at jobs for a while. So we always had to be prepared. So the first one is definitely want to make money. The second thing is that I'm here to communicate to you the market environment, what's going on in the market, right? Communication is usually positive or negative according to what's going on in the market. Thirdly, is that we want to change your relationship with money. And we do that by saying, hey, once we help you make money in the market, it's important to you to find a charity, something to give money to. See, a relationship with money is that when you earn it, you think it's yours and yours only, right? When you change your relationship with money, you begin having the mindset that there's abundance out there. Look, the stock market, $51 trillion that's out there that I'm just going to help you learn how to get your piece of it. We don't have to have a trillion, you know, we can get a few 100,000, you know, whatever is your goal, right? But it's important that once we make money, to give money away to people who don't know about the stock market or people who are less fortunate, right? That's important too. And thirdly, man, just basically giving you education, right? Getting education, having you understand about the market and what's going on, right? And those are our four principles that we guide by for the First Fruit Stock Club and the podcast, all right? So look, guys, I need your help, all right? Please. Please like, subscribe, and share the information on this show, right? I'm trying to grow my following, but I think the information is important. Man, I know it's so much to watch, you know, and you know, I get on my online tip where I'm just watching the latest funny thing. The internet is definitely undefeated, right? It's definitely undefeated. But it's important that we get some financial education. Like I said, one day look, my body, you know, a lot of times, man, I do not feel like going to work, right? Making a decision or whatever. I'm getting older, and you know, I'm glad that I'm able to make a decision. And one day you're going to have to make a decision, right? And we hope that you can make whatever decision you can. Is you know, if you can't continue to work or you decide not to work, okay? But it's important, right? So please like, subscribe, and share for people who need this information. All right, let me just go through the disclaimer real quick. The information provided in the First Fruit Stock Club podcast is for educational and informational purposes only and should not be considered financial investment, tax, or legal advice. The views expressed by the host and the guests are their own and do not reflect the opinions of any financial institution or regulatory authority. Investing in stocks and other securities carries risk, including the potential loss of principal, past performance, not indicative of future results. Always conduct your own research and consult with a licensed financial professional before making any investment decisions. First Fruit Stock Club and its affiliates do not guarantee any specific outcomes or returns. By listening to this podcast, you acknowledge that you are responsible for your own investment decisions. All right. So once again, the market downturn, right? The market has taken a break. And often, if you follow me or listen to my show, I always discuss how the market is a time machine, right? And now it's it's either compounding forward where people are happy and enthusiastic and feel like the market's going to go to the next level, or it's discounting backwards, meaning the valuations are going to come down because it may have valued itself too high. And right now, it's saying that it's valuing itself too high. All right, so let's look at it. The Dow Jones um, today, I mean, even closed positive, 260 points, 0.31. S&P 500, 35.9 points. And man, the NASDAQ has been getting hammered the past week of 350.61 points. Man, so look, these are some of the levels I want you to do. Last week, so I go week to week, right? We follow the market on a week to week. The time machine moves on a week to week basis. It moves forward, when it's enthusiastic and goes to new highs, and when it's not, it moves backwards. So the low in the Dow Jones Industrial Average was on the 29th. It was at 48,666 points. All right, so I want you to remember that level when you're trading or in deciding to buy stocks. But the Dow Jones is doing well. And let's look at the other two indices. S&P 500 and the Dow Jones is actually up 308 points since last week. All right, the S&P 500, man, has been down 100 points. The low since that was 6,852. That's another level you need to look at. All right, that's the low of the week. One other thing I want to tell you, man, the volume of the market has been keeping up. Let me just go back to the Dow real quick. And I didn't mention that the Dow, the average volume was 742.9 million shares, and the average was 534. So stocks have been really moving in the Dow Jones Industrial Average, the stocks in the Dow, right? And we know why, right? We'll go through that when we get to the NASDAQ. S&P 500, man, the S&P 500 is above its average volume, but just barely, right? The spread is not that. We always discuss the spread, rather it's one way or the other. So the spread is it's not significant. All right. Then the NASDAQ, that's where it is, man. The NASDAQ has been down 852 points since last week with a low of 22,742. That's a level we need to watch, okay? If it goes below that level, we don't know where it's going to stop. All right. So we just have to watch out for different levels. We have to pay attention. All right. So, but look, the average volume is 9.10 billion. And I'm sorry, the daily volume, the current volume is 9.1 billion, but the average is 8.52. So there's been a lot of shares have been traded, but it's been traded on the downside. People have been selling. So sellers are really out there today, and they're selling securities in the NASDAQ. All right, so let's go to the next section of the news. All right. All right, so man, it's been a lot going on in the news. Man, throwing away software. Man, companies like Microsoft have been getting destroyed. Microsoft have been getting destroyed. Anything that deals with software, and basically the premise is that AI will now take over, be able to create software for the different companies, and it's basically going to take over the market share of all these companies. Which is So remember we discussed that the market when there's always communication in the market. Either communication determines whether the environment is positive or negative, right? So right now, the communication is that software companies won't perform, right? That they don't have like their people are just going to leave. All people, no one's going to use Microsoft anymore or any of these other software companies out there, right? Um, but I mean, these companies have been around for a long time. They are going to have to make some adjustments, right? They are going to have to make some adjustments. But right now, it is not in favor. Man, I'm still cautiously buying like I'm only buying the big and the best right now, right? But I'm adding to Microsoft slowly, maybe a few shares at a time. But I believe in the future, and it's in my long term whole portfolio. In the future, Microsoft will return, right? Because they're basically saying that now that Microsoft is not going to make any money, but I don't believe that. But a also the private credit collapse, right? So private markets, private credit. What's going on in private credit is that companies such as Blue Owl has been really the stock has been beaten down, and what they've done is they finance a lot of these software companies' expansion, right? So they're getting beat down because of the software companies. So it's all like a snowball effect, starting in one area and moving to the next area. We don't know how far this will go. Software companies are not in favor at all. I caution anybody who's getting the software companies, but if you see how things pan out, maybe in a few months, it may be an opportunity to look at. But right now, like I said, I'm only buying a big and best Microsoft. Um, uh, not all the time, but every once in a while I'll pick up some shares as the shares of Microsoft are beaten down. All right, so opportunities. All right, so let's look at the top performing stocks of the NASDAQ 100, top weekly movers, biggest biggest advances among NASDAQ 100 names in the most recent session, not full week. So this is from week to week. Of course, this is last week into last Friday. Fortinet, 5.2%. AMD, 2.35%. They just recently reported earnings, but is down. AMD, if you were able to get on that early on, I don't know about the valuation right now. Palantir is a company that I like. They reported earnings. They did really well. They're up right now. Everybody's concerned about the valuation of Palantir, but it's a company I hold and I continue to hold. Amazon, another company I continue to hold. Right, up 2 points. So these are the top stocks. Top stocks that have been up for the last week, as of last Friday. I do a week to week to see what are the top stocks performing and their gainers. All right, so look, I wanted to get into two of the trades. One of the trades I'm in right now, I just got in this today. Man, silver, right? Silver had been on a tear. All right. But like anything else, everything has to take a break, right? So silver has taken a break. So it started consolidating. You kind of have to wait, after it falls. Now, even um, if you bought at the low on February 2nd at $71.12, the market is up $8, but it's down since the last week of $29. So I think the whole communication or narrative with silver is still there, right? Silver, it's an industrial metal. It's used in AI, computers, and other things. But also, man, right now, while the the NASDAQ, the top, the Mag 7 is out of favor. This is a good trade. And like I said, I started this trade today. Um, I was in gold early on this year, but now I'm in silver, and I probably will get into gold. I don't know, but silver. I just like the technicals of it. I like the consolidation of it. And I will let it play out, give it more time, and continue to pick up contracts. I'm putting options on silver. All right, I believe that it could return back to $100. And they're long term options all the way out to 2027. Right, the dollar is still the value of the dollar is still going down. And as I said, I did a show on a dollar and the reason what's going on, and one of the main reasons is they to pay that back the debt with cheaper dollars. Okay, that's the reason why a lot of times the United States or even other countries they'll devalue their currency because you want to pay back in dollars. All right. Man, another company that I like is ExxonMobil. ExxonMobil has been on a tear. This is another stock that I mentioned maybe about 2 or 3 shows ago at the beginning in January. I really like the chart ExxonMobil, and we just recently are having some issues with some of the other oil producing countries. I think that uh, we're going to have some issues this summer, right? Even right now. But I think this summer, and I think Exxon will be a good trade throughout the year. This is something I hold in my dividend portfolio, but as well, I have an option on this on ExxonMobil. All right. Well, I'm sorry. I was trying to get an option on this, so I'm waiting to get in play. But I think this is I like the chart, continue to like the company, and I think that it's a good opportunity for an old company, right? ExxonMobil. Man, I also wanted to get into Bitcoin. Man, Bitcoin, right? Bitcoin. So what I wanted to discuss is look at this chart, right? So September 2016 at $600. I think I did it for 4 or 5 years. And but I wanted to show you this chart. This is what's called a head and shoulders pattern, right? So in the stock market, what there are patterns, right? And most traders, you know this head and shoulders pattern, but I had to show this, and it was forming. So what makes it a head and shoulders is that the if you're facing it, the right shoulder is higher than the left shoulder. So, but the thing about this one is that the left shoulder is not that high. So what actually causes this formation? If you look at it, so the stock, what happens is the stock reaches a new high, then people sell off some of the stock, and then the people who missed out now, once after the sell, just like I showed you in silver, like I'm jumping in silver, they'll get back on, and right, and then it'll go for another run, right? And what happened is then they'll sell off again, right? And then the people who missed out will then try to jump back on. Well, what happens is if it doesn't reach a new high, right, or doesn't reach the top of the other shoulder, then therefore that's usually a sign of a head and shoulders formation. And that's usually a sign of a sell off that the rally has ended. And, this is the end of Bitcoin, the 4 year cycle, as they've been discussing. Man, Michael Saylor, I was just reading that his price I think is 74,000, right? And if he has some issues, who owns strategy, sorry, not micro, but strategy, that he's going to and basically his company, what they do, they buy Bitcoin, a Bitcoin treasury, and they buy Bitcoin, and he buys every time he gets a chance, and people give him capital, he buys Bitcoin, right? And he believes that Bitcoin will, and over time, because of the Bitcoins, and I'm not a cryptocurrency expert, but I do understand the premise of it is that the amount of Bitcoin will not expand. It decreases. And that's what I love when I'm looking at stocks. I did a show um, maybe 2 or 3 weeks ago on a company, ScanDisk, right? And the stock was skyrocketing. Why was this stock? Because there weren't a lot of shares out there. They have been buying back their shares the last 3 years. A lot of shares off the market. That's the same thing with Bitcoin. A lot of the Bitcoin going to be mined, and you're not going to be able to. Not going to expand. So looking at this head and shoulders, I don't know where this thing is going to end. It'll probably. I think it's going to today is 73,000. I was also reading that the new Fed chair stated um, that the banks will not bail out Bitcoin. So man, it's not looking good for it. But we'll see what happens for it. This may be an opportunity. I will probably buy some more Bitcoin to add to my portfolio. But man, it has been a great show. Look, the market downturn. I wanted to discuss about three strategies you can do during a downturn. One is, man, if you have some stocks that you maybe that have gained a little bit, and that you feel like that you can take a little bit off the top, man, I would say, raise a little bit of cash. And if you can't do that, man, if you have a job, you get a bonus, whatever, just try to get cash if you can get your hands on some extra cash, right? Because I think this is going to be a great opportunity for you to buy some quality stocks at some outstanding prices. All right, so we want to raise cash wherever we can raise cash. We want to look around, right? We want to find it. We got customers maybe that haven't paid us, that we own a business, whatever. We get commissions, whatever. We want to raise cash. We want to put cash to the side, and we want to have cash ready to deploy. All right. The second one is, man, we got to control our emotions, right? This time when the stock market trades down, it can be very emotional watching your money and the prices of stocks going down. And a lot of times, think about it. If you were during April of last year, if you looked at the stock market, right? If you looked at it and you got scared and sold, man, you probably lost a lot of money. But if you stayed in there, man, you are very happy. In fact, if you stayed in there and you raised cash and you added to some of the quality positions, man, you are very happy right now. I'm very happy right now. I wish I would have had more money to put. But right, so when we get an opportunity to, and the market starts, we want to raise cash and have some cash on the sidelines for us ready to invest. All right, and the third one is invest. Right, right, and the downturn is an opportunity. And I know it's scary, but I would say dollar cost average. Right, so we don't want to just put a whole bunch of money in the market. Right, we want a dollar cost average. That means the stocks go down, stock goes up. We just want to put a little in at a time over time, right? And spread it out, the money we have, and then we'll see what happens, right? It's no guarantee. This is an investment advice. The market can still keep going down. But if you bought a stock, or for example, Bitcoin, if you like Bitcoin at 100,000, you should really like it at 73,000, right? And I think it's going even lower, but a lot of times we try to time that and then we miss the next rally. So dollar cost averaging is a great strategy where you just buy a little bit at a time, right? Just a little bit here, extra dollars you get a little bit here, a little bit there. Nothing that you have to be something that you feel you're okay, that you can afford to lose and that you can afford to hold and wait, right? Because we don't know when the market is going to return, but over time, the stock market has proven to be one of the best vehicles for generating wealth. And like I said, you're not going to be able to work getting older. Body's getting older, right? You're not as sharp as you used to be, right? So we sometimes we have to think about it. Hey, um, I'm losing just a little bit, right? I'm losing a little bit. Man, it's a whole book on that. I forgot the name of that book. I remember, but sometimes as an adult, you have to understand that, your body does depreciate, right? It does depreciate. So how do we do that? How do we overcome that? We overcome that because by investing in the stock market, and guess what? The stocks go to work for us. Matter of fact, everyone that works at, for example, Microsoft, right? They now work for us, right? So we don't have to work 50, 60 hours. We got everybody at Microsoft, and a share of Microsoft, a share includes all the employees at Microsoft working together for the goals they have, which is for Microsoft to be profitable. And now they work for us. All right. So I know it's hard putting money away, but you can. I know if you go through your budget, there are some things that you spent money on that you shouldn't have. That if you would have put it in the market 5, 10 years ago, like there's yard sales that go on all the time, right? Things that we bought, we don't even use anymore. But if we could just put that money in the market, what better position you will be in right now, right? We have to really ask ourselves hard questions, and we can't just let life go by. What better position would you be in right now if you just, a lot of the things that you've bought, as you just say, I don't really need that, right? And, we're a consumer economy, and yes, you should buy. But once again, let me just tell you about our club, First Fruits, right? First Fruits, the whole philosophy is that our first dollars, we invest, right? We give, and then the rest of it, we do what we want, pay our bills and just have fun and whatever. But if we do those two things at the front of our checks, the first fruits, we take those things, then everything else works their way out, right? Because then stocks and the dividend begin to take over some of the heavyweight of our job and our bodies that depreciate. All right. Look, thank you guys for giving me a few moments of your time. Like until next week, man, the market is going down. But look, this is a great opportunity. I mean, we go through this every couple of months, right? Go through this every couple of months. And this is another opportunity. And I don't think it's over with. Okay. But you can still, like I said, dollar cost average. If you like a stock at one point and now it's selling for $30 less, you should really still like the same stock at the $30 less price, or $100 less price, right? Right. And you just don't put all your money and just boom, a little bit, take your time. And I think February and through March probably will be a rocky market, and even through April. Man, come back next week. I'm going to tell you a secret that the Federal Reserve stated, right? That's going to prepare you for the market, right? And what's going on. All right, man. Thank you guys. Until next time, stay fruitful.
The market is volatile, the stocks keep going down, then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow. Give